Caterpillar hitting a fresh record high after posting an earnings beat and many other things that drive this stock. We've got Caterpillar Chairman and CEO Jim Umpleby joining us exclusively now. First, Jim, I'm just going to outright congratulate you because I know that there were some, last time you reported, stock goes down to 208. People didn't understand what went on. You were very clear on Mad Money that this was the beginning of a major breakout. What does the breakout include? Because it's obviously up 120 points since that interview.
Well, thank you, Jim. It's great to be with you, Carl and David, this morning. Let's just start by just thanking our global team for another strong quarter and an outstanding 2023 record financial performance. And to answer your question, what's really driving it was sales and revenues, all-time record up 13%. Adjusted profit per share, again, all-time record up 53%. And we're also very proud of our team's ability to generate cash. Our ME&T free cash flow was up 74%, all-time record of $10 billion. And we returned last year $7.5 billion to shareholders through share repurchases and dividends. So again, couldn't be more proud of our global team and how they performed in the last year.
I think that one of the things that I think people have to understand is that this is a new cat. When I read that demand remains healthy for non-residential and residential construction, people probably don't understand. Non-residential includes incredible infra, which is going to be spent also this year, but also data center, which I think now is much more important than almost anything you do.
Well, you know, we serve a variety of diverse end markets, and we are quite excited about the opportunities. We do believe that our total addressable market is expanding due to the secular growth trend around data centers and that growth that's there due to cloud computing and generative AI. And so we're excited about that opportunity. And we actually announced in our investor call a few minutes ago that we're making a large multi-year investment to increase our manufacturing capacity around large engines. And those will help us serve that growing demand in power generation around data centers. Also, we believe there's an opportunity over time through the energy transition as more renewables are added to the grid. Our large reciprocating engines and our gas turbines can be used to provide grid stability. And those engines and gas turbines burn a wide variety of fuels, natural gas, biofuels, hydrogen blends. So again, we're very excited about what we see as future growth opportunities moving forward.
Now, Jim, one of the things that has dogged you or dogged your company, and I think incorrectly, is that there had always been a belief that there maybe was too much inventory. I think you put that paid. That's no longer the issue. If anything, I would think that you do have an equipment shortage. You did note that there could be a little dip in some businesses, which I think is one of the reasons why the stock is coming down. Can we clarify that? Because I think that was that the dip, so to speak, was in one bit of business and should not color 2024 earnings.
Yeah, as we think about dealer inventory, you know, it's important to keep in mind that our dealers are independent businesses and they make their own decisions about their inventory. And the decisions they make are based on a variety of things. One is availability of equipment, and the other is what they see happening in the marketplace. And so as the supply chain constraints have started to ease, our availability has improved, and that's allowed dealers, again, to make different decisions, and our customers as well, as to when they place orders for machines. But the bottom line on dealer inventory is we're squarely in what we consider the appropriate typical range for dealer inventory, so we're not concerned about that at all.
Now, I did want to talk about the fact that supply chain is now good. We spoke to Nucor last week, and one of the things Nucor said was actually your business, not your business specifically, but the business that you're in, machinery, was weaker. It obviously wasn't you, and I think that when I see supply chain ease, what that tells me is gross margin going to get better this year, which matters tremendously. And also, I think you can meet the demand of the hottest units.
Well, we have been working very hard to increase the resiliency of our supply chain, and we're continuing to work on that. As I mentioned, we have seen supply chain conditions ease, but we also talked about the fact that we are still facing some constraints around large engines, and that has an impact on power generation and oil and gas and a bit on our larger machines. But again, you know, we feel comfortable with where we are. We're making the right kinds of investments to continue to profitably grow our business.
Let's talk about infrastructure, because I was surprised, actually, you didn't need to emphasize it, frankly, because you have so much core business. But I have to believe that when we start talking about chips, talk about IRA, that this is not something that necessarily ends in 2024. If anything, it seems like it's just starting.
Well, we had a strong 2023 in construction industries, and we told our investors today that we expect another strong year, particularly in North America in 2024. And of course, a lot of that is underpinned by the infrastructure investments that are government supported. So again, we do feel good about what we see in 2024. And it does take time for permitting to come through on many large projects, as you know. So we believe that the infrastructure investments being made by the government will play out over time as those permitting processes conclude.
In the old days, I would expect that you would have some sort of a relationship maybe with a business that may be in construction. Earlier this year, we announced the success of collaboration with Microsoft and Power Systems demonstrate the viability of using large format hydrogen. I want to combine what you're talking about, which is a new customer set, with, and just drill down, because you did mention it, to sustainability, because this is, again, a market that's 2026 to 2030, as far as I'm concerned.
Yeah, so we're investing in a variety of sustainability initiatives. One is making our traditional equipment more efficient, and we're doing that. And we talked about a new product that we introduced recently that is improving fuel efficiency, which improves emissions. But as you mentioned, we're also working with our customers to really work on some cutting edge kinds of advancements in sustainability. With Microsoft, we were the systems integrator, and we were able to demonstrate hydrogen fuel cell backup for data centers. And at the same time, though, we are supporting them with more of our traditional machines as well. So really, we're doing both. We're supporting our customers today, and we're also investing for the future to support them and as they strive to meet their sustainability objectives.
Hey, finally, Jim, I know you had a comment on the call about China demand, specifically on heavy excavators. Can you just talk about what that trajectory looks like?
You know, China, typically, if you look over a long period of time, China represents 5 to 10% of our total sales. We had a couple of very strong years in 2020 and 2021. We saw a decline in 2022, a further decline in 2023. And so we told investors that last year we were below that 5 to 10% range. We expect that market to be relatively weak again this year. And that market for us is primarily hydraulic excavators above 10 ton. But again, regardless of the fact that the Chinese market was relatively weak last year, as I mentioned, we produced record results.